Are you looking for the next big opportunity in the gold mining space? Today, we're talking about Artemis Gold, ARTG, a company that's on the verge of transforming from a developer to a full-scale gold producer. And if you know anything about mining stocks, that's when the real growth happens. Stick around because by the end of this video, you'll know why Artemis Gold could be one of the best plays in the space right now. Let's get into it. First up, the basics. Artemis Gold is a Canadian gold development company focused on one major project, the Blackwater mine in British Columbia. This is a massive, world-class project with 12.4 million ounces of gold in measured and indicated resources. It's one of the largest undeveloped gold projects in Canada, and it's about to enter production. Leading this company is a powerhouse team with a proven track record. Stephen Dean, the CEO, is known for building and selling Atlantic Gold for $722 million. Then you've got Jeremy Langford, the Chief Operating Officer, who's worked with companies like Centamin and Endeavour Mining, overseeing multi-billion-dollar projects. And finally, Jerry van der Westhuizen, the CFO, is a seasoned financial leader with over 20 years of experience in mining finance. This is important. You don't want rookies building a billion-dollar gold mine. This team knows how to take a project from development to production, and that's exactly where Artemis Gold is headed. Next, let's talk about the Blackwater mine itself. It's located in British Columbia, Canada, one of the most mining-friendly jurisdictions in the world. This mine is expected to have a life of around 15 to 20 years, with even more upside if they discover additional gold during exploration. Plus, they're tapping into clean hydroelectric power, which not only lowers production costs, but also checks the box for ESG-conscious investors. Now let's talk about valuation. This is where it gets exciting. We ran 3 scenarios: worst case, average case, and best case. Here's how it breaks down. In the worst case scenario, we discounted gold recovery to 80%, increased all in-sustaining costs to $1,600, and applied a discount rate of 10%. In this scenario, Artemis NPV sits at $5.14 billion, implying a share price over $20. In the average case scenario, we increased gold recovery to 85%, decreased all-in sustaining costs to $1,400, and applied a discount rate of 8%. In this scenario, Artemis Gold's NPV is $8.52 billion, implying a share price over $33. In the best case scenario, we increased gold recovery to 90%, reduced all-in sustaining costs to $1,200, and applied a discount rate of 5%. In this best case scenario, Artemis Gold's NPV sits at $12.49 billion, implying a share price just under $49. Here's the key takeaway. Even in the worst case, Artemis Gold's implied share price is around $20. Right now, the stock is trading under $10. In the best case, the stock could reach nearly $50 per share. This is why some people are calling it a potential multi-bagger opportunity. Of course, this is for informational purposes only, and you should always do your own research and consult with experts if needed. That said, if you are looking to add gold exposure to your portfolio, consider looking into Artemis Gold.